Good morning and welcome to Equity Story. It's the 26th of October, Wednesday. We had a pretty good day yesterday on the Dow, which is hopefully going to flow through to us today. However, Claude, and welcome to you. We saw after market, there was probably two or three big companies reporting, I think Microsoft, Meta, Google, and they weren't that fantastic, right? So
they're disappointing.
Yeah, so after market, some of these are dropping down, and I think 5, 6, 7%. So this particular, if we have a good day, we might see a bit of a pullback on the US markets tomorrow or in the next couple of days. So a little bit disappointing, but maybe expectations were there. That's going to be not as good as previous quarters. So we're just going to watch that. I'm not getting too excited with the markets today, but there's a few things to go through. There's a few announcements that come up through today. So let's talk those things. Before I do that, we've got the Equity Story disclaimer in front of us. As per usual, everything we talk about is just general advice. Every stock is just looking at the actual story itself. And of course, we're going to go with the charts too. All right, so I'm going to quickly switch to share the screen, and I'm going to show you my chart so we can go through that too. And I'll just quickly just do that. We can see all this. So, Claude, we've got a few announcements this morning, so I'm quickly going to go through them with you if I can. Join in if whenever you feel like you've got some information about it. We're going to start with FBU, and I'm going to put the charts on as well at the same time, just to see where they are at. But in this market, I mean, I've been seeing you're probably feeling the same. Anything that's I suppose is reiterating this guidance to me is quite positive in this market. So it's actually a good little starting point for a company post the reporting season in August. So if they can, AGM, whatever, they can reiterate that they're on track to achieve the FY23 guidance. The market's seeing this as a fairly okay positive type step. So I'm going to quickly put in FBU so you can see the chart. It's not trending at all, but the reiterating guidance is okay. The business maybe itself right now is not my cup of tea. With the building industry maybe going a little bit sideways with inflation and slowdown in real estate and everything else on that. So I'm not a big fan at the moment. I know there's a couple of big brokers that really love this story, but for me, pass. Have you got anything else to add on FBU? Do you know anything about FBU?
I don't actually know it well, so I probably can't add much to that one. I just agree with the broad stroke stuff you just said. Then it doesn't jump out to me as something to buy.
All right, fair enough. Let's move on to the next one, which is Mineral Resources. They come up with their numbers today. So let's have a look what they are. They have been actually on a tear at the moment. The good and the bad stuff is so the bad stuff is the iron ore, which is got slightly at the moment a little bit under pressure. The pricing is under $100. They don't have the best quality iron ore anyway, so for the moment, they're probably suffering a little bit with that. However, on the flip side, the lithium is going probably very, very well with the prices rising of lithium. They are ramping up the production of Wodgina, Mount Marion. So tell of two halves for me. I think the focus probably right now is on the lithium. However, they talked about they're going to be possibly divesting that and spinning it out. So we'll see how that goes, but it's going pretty well at the moment. The chart obviously is great. So if you're in this, you're probably holding, and I'd say, if you're trading this, you've got a $64 support. So if goes below that, as a trader, you're probably going to be out. But other than that, I don't see a problem with it. However, you just got to watch because they're all cyclical. Prices can go up and down on the commodities. So, don't fall in love with those sort of stories. But it's okay. Let's move on to the next one. A couple of smaller ones I'm going to go through, and they are in the financing, loans, origination, all that stuff. So PLT is one. They're not the flavor of the month because rising interest rates usually means you've got a higher if you've got higher repayment deals with your borrowers and so on. So for me, Claude, this sector right now is probably uninvestable, even though they are probably on the knees, and even though they're coming up with decent seemingly announcement, they are unprofitable, most of them. And like I said, I think maybe that's not just the time right now to get into it. I want to probably see a little bit more stability in this space. Would you
I
agree?
agree. Yeah, the whole consumer credit or the low dot credit, subprime credit market's just been absolutely flooded the last couple of years. And we won't, like, first of all, I don't think it's a good space to play in generally. And then second of all, now is definitely a bad time because at the moment, yeah, look, we've got interest rate rises, but we don't really have people in distress yet. It's easy to get a job, et cetera, et cetera. But in the act of trying to slow things down, we might find that some of that changes, and that's when those companies will get into trouble.
Yeah, no, fair enough. And you can see the charts, all three of them. So Wiser, Prosper Group, Plenty, looking pretty dire, I have to say.
There was
there
was one I owned, EPY, Early Pay, which is like super cheap compared to those ones, like dividend paying, profitable and stuff like that. But I sold that a while back anyway.
Okay. Yeah, well, fair enough. I mean, it's going sideways, as you can see on the chart. And at the end of the day, it's just, yeah, the sector is probably just not right now, if maybe ever. Like you said, it's
but if ever I want to buy it on a good dividend yield, like Early Pays on 7.5% trailing dividend yield now. Okay,
let's go to the next, and that is DTC. And I know that we've talked about it a little bit, actually quite a lot. But recently, of course, when you joined us, you're not a big fan of this. I thought it's pretty cheap, and you can make maybe a quick buck on a trade here and there. Today's announcement on a quarterly, it wasn't too bad. I mean, reiterated the guidance, I don't mind that, but it's coming off a pretty, I suppose, uninspiring period. So it probably needs a little bit more time. Market needs to probably get more comfortable. They need to actually show probably a bit more as well, growth and profitability and so on. So if not for me at the moment, what do you think of DTC?
Yeah, look, I would love for this to be a turnaround in the end. And the positive out of this quarterly was certainly the fact that I think for the first time in quite some time, they actually had a positive operating cash flow. However, the reality is when you're spending another $2 million on rent, investment in intangibles, intellectual property, and also even PPE, and there is some capital requirements there. The free cash outflow still for this quarter is about 2 million, which is just way too high for them. And they just need to get that positive. And that's really the thing that the market's doubting. And unfortunately, I don't think you can put too much weight on their guidance, given they have a long history of missing guidance. So at a certain point, the market, and understandably, just switches off from all the promises and needs to see the actual free cash flow now. Their FY 2023 guidance says that free cash flow will be at worst negative 2.5 million. Well, this quarter they've done negative 2 million. So that implies that things are going to get better and maybe even go into positive cash flow for the rest of the year. I doubt it, but if they do meet that guidance, then they will actually for sure, be on a recovery trajectory. And it's good that they're actually giving free cash flow guidance now. It seems like they have half a clue that the market needs to see that level of performance, not just revenue, but yeah, overall. And they're not dead yet, but they're not dead yet. They're still in it fighting.
I think there is hope for DTC. I don't, as long as, like you said, as long as they deliver and not just talk about it, but actually deliver. And I think you make a very valid point about a lot of these tech companies who make a lot of promises. In the DTC's case, unfortunately, they promised and did not deliver. So, it's even more unbelievable when they talk about guidance. But some of these, in the mega ports, your whispers, which we'll talk about in a moment, they are unprofitable, but they are, the management's talking about we are going to get to cash flow positivity or EBITDA positive in, X amount of time. While I want to believe that, I think the market is just saying no. I think that it's even further moved down to the path of you can say what you want. We want to see it on a piece of paper. We want to see it black and white.
Because they've multiple times they've missed what they said they were going to do. So yeah, it's like no one's going to believe them now.
No, not anymore. And I think the market's pretty tough. And look, fair enough. All right, so let's actually move to Whisper because that's the other one that I have to say, I had a little bit of positivity and confidence they're going to deliver something decent. Unfortunately, they didn't today. So I am really moving off this for the moment. And, it gets into that basket of show me first before I believe you what you say about your guidance that you're going to get, into the positive EBITDA, whatever cash flows. So I'm getting more harsher with these bloody companies because they're starting to piss me off. So let's go to Whisper and go on. Tell me your take. Did you see that quarterly?
Yeah, I did have a look at that. And look, the reason I follow Whisper is because I actually ages ago went long this in the pandemic and rode it all the way up to like $4 something, and then I rode it a fair way down as well. And I think, I sold my last shares. I wrote an article on selling Whisper where I explained like the red flags that I was responding to. But look, the problem with this is that there's three probably problems with Whisper. First of all, these guys are not that good a high quality business in the sense that they rely on reseller partners to sell their product. They rely on partners who they resell the connectivity of in order to provide their product. So they're going to be naturally lower margin there. And also their so-called recurring revenue is actually a lot to do with the volumes of text messages. Obviously, when we were all doing like lockdown and everything like that, there was way more, automatic processes where you're getting texted, whether, that's to tell you that you could come out of lockdown and go into lockdown or get your test results back or whatever it might be. And so that sort of hurt them a little bit. And then the third thing is, I'll probably just say like lack of confidence in management. These guys' management, big sellers, sold a lot of stock at much higher levels, and big spenders as well, huge spenders.
You saw today's outflows was about what, 7 million or 8 million a quarter. I mean,
yeah, exactly.
How are they going to manage to become cash flow positive in a very short period?
They won't, mate. They genuinely are willing to bet anyone they're not going to. They're going to raise capital.
And this is what worries me because they are reiterating these guidance, right? They're going to get what they say. But when you see today's quarter, I'm thinking Buckley's chance.
There's no chance at all. Like it's completely crazy stuff. Like there's no reason to trust them. Actually expenses went up in Q1 to Q4. Now, admittedly, they make the point that that's only because they pay the annual STI in Q1. But even if you exclude that, expenses barely budged down. They went from like 15 to 14.5 or something like that. So actually they went from 14.84 to 15.56, even excluding the STIs. That's hardly any movement at all. Hardly any movement at all. And at that rate, it'll be a decade before they actually get to break even. So, or maybe not a decade, but it'll be a long time, put it that way. And so definitely just step aside, I say, and let it play out. There's a real business in there somewhere, but I think it's a badly run business and it's not a very good business either.
And I think also a very important point that you made, I think last night when we talked about it, and I think that's going to probably play out now when I'm looking at this, and that is the cash position and a capital raising to come when they are, on the pretty much knees at what, 64 cents today. So, they're really, for me, the risk has just jumped up. So on this quarterly, the risk have just completely now gone through the roof. You've got to be out of this if you haven't already. You shouldn't be trading this at all, but it's cheap. It's cheap for a reason when you look at it. Even though I always think that everything's got a price, and they're probably the private equities are running rulers all over these sort of things. And we'll talk about another one that's actually been in a takeover game today.
And that's how it could end for Whisper, I reckon.
Yeah, exactly. And I think it probably will end like that. But
I reckon that's your upside play really at this point, is that somebody says, well, I can come along, I can really do some cost cutting, make it profitable, so I'll pay this much for it.
Yeah, but buying at 60 cents and hoping for $1 buyout, I mean, that's not the way to play these things. So for me,
Yeah, because all you know, you buy it at 60 cents, it goes to 30 cents and gets bought out at 60 cents.
Exactly. So pass risks have increased. They're probably now high risk of our capital raising, even though they're saying we don't need it. Yeah, right. We'll see. I've given up. So Whisper is out.
Can I put to make it a bit more positive? Can I put one that I quite like on for the?
Yeah, go on.
Campify, CHL.
Okay, let me just put that on. CHL.
I don't own any shares in this at the moment, but it's kind of one that I'm like, at some point I kind of want to buy some shares in this one.
Okay.
I haven't quite decided when I should buy it.
Did you look at the financials of this? How is it tracking? I know the business a little bit. I think they are in the rental of the RVs and all those things, right?
Yeah. So look, the financials aren't that great. I don't want to so they already put their quarterly out a couple of weeks ago, and what it shows is look, the metrics are at least heading in the right direction. So you got a strong increase in receipts from customer, partly to do with acquisition. You've got a reducing cash burn. So these guys only burnt about 1.6 million in cash in the most recent quarter. So substantially less than Whisper there, really.
It's manageable. It's manageable,
less than a quarter, yeah. And they've got almost the same amount as Whisper. They've got about 13.5 in the bank. So at the current rate, you could say, well, they can keep going for a year at least before raising capital. And also, given they're growing quite well, you would at least give these guys a chance of not needing to raise capital. Bit of an uncomfortable position, just because I obviously prefer get to that point where I'm like, I'm 99% certain that they won't need to raise capital. Yep. But look, I just think it's interesting just because it has not been performing badly at all. It does have financials going the right way. And also, if these guys can just get it to break even, then they can just spend some time trying to grow market share and make sure no competitors really come along. At a certain point, these guys being the number one sort of P2P suppliers, where if somebody wants to rent out their camper van, someone else can go and rent it from them. These guys are number one at that in Australia and New Zealand. I think just a couple of years of consolidation in at least Australia and New Zealand, and then they will become the main game in terms of, I don't think anyone will ever bother trying to compete with them, because it'll be too hard to build up that network to have the best supply and have the most visitors and all that sort of stuff, and have the brand where people know to go to Campify to find a camper van. So could be a genuine competitive advantage. Put it on your watch list, and somebody tell me when I'm supposed to buy this one.
I'll tell you, I don't mind this business. The only thing for me is I'm not going to jump in too early on this, and the reason why is the position obviously in Australia is pretty good. They've just bought something in Germany, I saw, and I did have a look at the actual European space of renting RVs. It's actually highly competitive. There's a lot of players there. I'm actually worried about them entering Europe, to be honest. So I
think you're right about that. I would be more bullish these guys if they were just like, we're Australia and New Zealand and we're going to absolutely kill it and be a profitable little business with a good moat. That's what I'd like to see.
Yeah. And I think they're jumping maybe too early to Europe. I'm just worried. So I'm going to wait to see how that plays out.
Yeah, I think it's like a natural empire building thing, like the guy's imagining himself the CEO of some multinational, like, he's got a big dream there.
Yeah.
And I'm not saying like that I would bet against him, but his dream is like really, I would much prefer invest in him just building something that's super valuable in Australia and New Zealand, because I reckon that'll be way more profitable for shareholders.
I agree. I like I said, there's nothing wrong going overseas and obviously trying to expand your businesses and so on, but I don't think they've fully nailed Australia as yet. So I think, you should concentrate here, get it all down.
Could not agree more. They're still assailable, like they should just concentrate on getting a good business here and making a profit, and then use that to go overseas.
Precisely. All right. So let's move on to the next one. And I want to mention Coles because they come up with the numbers, updating the markets. It wasn't too bad. You know, there was some growth overall, and it is just a dividend stock. So for the dividend players out there, stick to it. I think it's okay dividend wise, nothing really too scary in today's numbers. So yeah, look, you can see there's a support around the $16. So you're holding on for the moment with the dividends. So let's move on to Medibank Private, MPL. And I know you are a member of Medibank Private, so maybe you've got a little bit more of an insight than me. So please, let's talk about it, because I know they've been hit by this cyber attack, right? And they've been trying to really minimize the fallout from it, but you knew straight away it's going to be pretty big, right? I as soon as I saw it, I thought they are hiding stuff. They don't want to go through everything. It's starting to everything come out that it is actually pretty bad. I mean, everything's been pretty much breached. The whole
Yeah.
So it's going to hit them. It's going to hit them somehow financially. What do you think?
I think that this is definitely bad for their business. Like, I would not recommend anybody to sign up to Medibank. I sorely regret that. That, you know, I've been a customer of them. They've really done I think that they're, you know, a very deeply immoral company, the way they've been communicating. Like, I've been getting an email from them every day about this cyber breach. And it's always like downplaying it massively. And it's like, no, the truth is that, like, you know, they've got everything. And and it also like heaps of personal information, like all medical stuff and everything as well. So very careless. Very horrible way of treating their customers. Obviously, health insurance is a very sticky business. It's really annoying to change because, you know, if you go and change insurer and then like something happens or whatever, then you often won't get covered there. You have to stay with the one, because it's like you have to have been on that policy for a certain amount of time before you can make claims. So very annoying business to get away from as a customer, and they're obviously very bad business, and they're not even the cheap. There's nothing going for them, nothing at all. There's no reason to ever have a policy with Medibank Private, and I wish I didn't. And I feel like that's going to be bad for them. This whole thing's bad for their brand for sure, and it's going to make it harder for them to acquire new customers. And if you were Medibank's competitor, you'd be doing an ad campaign in the works right now.
Yep.
And you'd be saying, oh, we put cyber insurance, you know, cybersecurity is a #1 thing for us. We're like super careful with all your details. You know, we've never had a breach, blah, blah, blah.
100%.
Yeah.
I mean, this is, yeah. Look, I swapped from Medibank Private about three years ago, I think. Because first of all, they were way too expensive than everyone else. And you know, it's a business that really, it's also highly regulated, you know, by the Australian government. So it's not something that can just grow on its own by great amounts. So I've never been a fan of these sort of private insurance businesses. So pass for me, even though, you know, I've got private health insurance, of course, it's just not for me. And, you know, this breach really, like you said, I think 100% brand wise, really bad. It's going to take them a while to recover from this. And they've, withdrawn all the guidances, understandably, because they just don't know what the fallout's going to be. So for now, pass. Let's see what happens. And yeah, watch the space. I'm sure there's going to be more announcements coming from MPL. All right, moving on to Kogan, KGN, another business that was a once high-flying business. Mr. Kogan did extremely well. However, it's come back from the incredible performances to where it is now, 353. I don't think they've been managed very well, to be honest, Claude, over the last maybe couple of years with the COVID. I think Mr. Kogan has been almost learning on the job. I mean, we've always talked about that.
And getting massive pay packages along the way. So,
yeah.
And cashing out. Yeah, look, it's not one I like. Look, it's going to be cyclical. When the consumer picks up, it'll probably go up again. It's got operating leverage in that business, but not one I like for the long term. And the fact that here we are at, whatever it is, $3.50, $4 now, all these years later, after everything that's happened, Kogan's taken a bunch of cash out of the business, but has the value stayed in the business for all the work they've been doing in the last 3, 4, 5 years? Like, the answer's no, it hasn't. It ramped the share price up. He sold a bunch. Now it's down.
Yeah. And I didn't actually even think that quarterly was that good. So for me, I'm just not interested. You've got to pass, maybe down the future, somewhere along there where everything stabilizes, you might see a bit of a return to growth and a bit more stability in the business. But for me, no, not from the moment. All right, CGC is the next one. And I just wanted to mention this one because I saw an announcement today saying that there is some action in one of the big, I think, players is buying some shares. I think they took about 13% stake, which is probably a precursor that there might be some M&A activity down the track. You don't take a stake of 13% without maybe leading to something else further. So interesting. I mean, it's obviously on its knees. So generally speaking, if you're a genuine investor and want to buy stuff, you want to buy stuff on the cheap, right? So I can imagine private equities or any other companies that are looking to buy anything, you want them to buy them when the companies are distressed or close to the lows. So understandably, this is what's probably happening right now. But again, not a business for me. A lot of moving parts, a lot of risk. Even though I like the agri space as a long-term theme, this is probably one of the more riskier plays that I can think of. So pass for me.
Oh yeah, pass for me as well. Not a good kind of quality business. Yeah, could be undervalued, it could be not, but not my kind of play.
All right, next one, ELO. So we just briefly mentioned it earlier. There's a takeover offer, and ELO is the one. They've come out with, I think, what was it? I can't remember who it was, but $4.85, wasn't it? It was an offer.
Yeah, it was.
There was a massive, massive premium to whatever they were trading before. And you can see, I mean, this company about 4 weeks ago was almost at $2. So that's almost 100% premium to what it was 4 weeks ago. It just shows, and we talked about it before we went online, Claude, that, it probably at $8 was way too expensive. At $2 is probably way, way too cheap. So it was the value was somewhere in the middle. And this is what actually is playing out. So $5 is probably reasonable. It's not a bad business. It's okay-ish. And, they are taking their steps to become cash flow positive, EBITDA positive, and profitable over the next couple of years. So someone decided we saw a good opportunity. We're going to buy it out. Anything else to add to this?
Yeah, no, that's pretty much it. Look, if I was a shareholder, I'd kind of be thanking my lucky stars that this happened. Wasn't in love with the potential of the Elmo Software business, and I did think, at a certain point it's getting kind of cheap, but I never was cheap enough for me to buy. But in this case, they've got the lucky win, big increase in the price now based on this takeover offer, and I think just take the win. Basically.
Yeah. So anyone who bought it in 2022, you're on a winner. Anyone before that, you're on a losing streak, unfortunately, by the looks of things. But, at the end of the day, I agree with you. This is a win for those that sort of bought it this year. Take it, because I think I saw that also that the management recommended this takeover. That it should go through theoretically, unless there's someone else comes in and maybe bids it higher. But, we don't play that sort of game.
I honestly don't think that's going to happen. It seems like a pretty full bid to me. Like
it does, isn't it? That's a massive premium. Possibly
I would probably just sell if it gets close to the actual price of the bid. It's at 440 at the moment, so there's still a little bit of arbitrage in there. And so you could probably just wait a few days and see where it gets to.
All right, let's move on to the next one. Another disappointing, unfortunately, update today was Codan. Used to be one of our favorite stories. We saw it go up to all the way to $20. Then we saw it all the way come down to $8. We thought there's some value around the $8 mark. We thought we had to go at it, as a contrarian play. Didn't quite work out. And since then, since the last update in August, it's just been on a downhill ride. And I think investors, the insiders, decided to sell down because they saw that there's going to be unfortunately, probably a slowdown on sales. And that's obviously proven today with the update today, Claude. And, you know, the business that's been suffering is that metal detecting business, which looks like almost going to halve from what it was the previous corresponding period. So have you got anything else to add to this?
Where did you get the half bit from?
Well, maybe I'm over exaggerating. I think the sales for this period maybe what was it, 60% of what we was last year? Is that right?
Yeah. So I think that the key point was it said based on this level of sales in the first half of FY 2023, we would expect Minelab to report a segment profit in the range of 30% for the first half. I think that means 30% of the segment profit last year, right?
Yeah, but did they show you that? I think they showed the sales of just the Minelab business versus what the previous corresponding period was, and I think it was 130 versus 80 something.
Yeah, right. Yeah. No, I'm not saying you're wrong. I haven't had a chance to. I just kind of came out right before recording this, so I didn't have a chance to absorb it all properly. Look, I think we all the market already knew that it was going to be weaker for the Minelab business in this half. So I guess this is like basically even worse. Oh no, look, here they go. So you're right. They said the H1 FY23 NPAT guidance of 25 to 30 million versus 50 million in FY 2022. So you're right. That's bang on half at the low end there. So that's pretty bad because that means all of a sudden, you know, what was PE 8 is actually PE 16.
Yep.
And yeah, it's just, I mean, I own shares in this one, so definitely taking the bad news today. And like, look, what can you do? So it's just no longer cheap. I thought that, you know, feel like, you know, I don't think it's a terrible business. For example, like we're talking about, it's still making $30 million in profit. But yeah, look, what can we say? They reckoned that they were telling us this story about their sales in Africa that has just proved completely wrong.
Yeah,
and now they're
collapsed by the looks of things.
Yeah, so now they're saying, I saw somewhere they were saying that they're like rebasing their costs. So, you know, they've got the scale of the business is wrong in Africa. Do you know what? Like we kept on asking them beforehand about like their business in Africa and the Minelab business, because everyone was worried about that. Everyone knew that it had done really well in COVID and might be a problem. And yeah, basically they kept on saying, oh, you know, we can really get out there and sell it in Africa, blah, blah, blah. It's sort of, you know, not too worried. But then sure enough, it's gotten wrecked. So they've obviously just been overconfident with what they were saying to the market there. So working through the ramifications of that, obviously you've got the share price down, you've got profits are going to be down. We already knew profits would be down a bit. But then most importantly, I think when you have this kind of event, and this is what really kills it, is the new CEO has only been in about 1 year or whatever. Like this is squarely his fault. Like he was the one that was out there telling people how confident he was that like he could go and sell stuff into Africa. And I remember them saying how they could open new markets and all this stuff about that basically implied that like they can sell more Minelab stuff. And yes, on the one hand, you know, they might have not be as good as the last half, but at the other hand, we have obviously a massive problem here. If their overall profit's going to be 25, 30 million, like obviously for their African business, they're actually losing money because they've got all these costs and that's weighing on the rest of the business that's going fine. So they've completely, sounds like they've completely forced up the management side of things. I think you've got to say now that and I have to work through with this myself, and I'll probably write an article about it today and really try and absorb it and deal with it. But, you know, my position on it now, I would say, is that my default position is that the CEO has no credibility. Wouldn't trust him now. And so unfortunately for me, on although I do think the business has value and I'm not like totally against it, I've now cooked myself on it. I've lost a bunch of money. I must be down 30% on this now or more. And at this time, I have no inclination to say, oh, I like it or anything like that. I'm like, damn, this is blown up in my face.
Look, I've very well commented on this, and I agree with you. When the management loses a little bit of credibility, you cannot recommend this as a buy, even though it looks maybe, that the business is still okay in the long run. Like you said,
yeah, like the thing is, like,
tough period, right?
Yeah, that's the thing is, like, I think it's just going through a tough period, and even at the lower level of earnings, it's not that expensive, and it should still pay a dividend, which was like my main reason for buying it. It's just the only issue is this guy's going out and he's set the expectation that he can do X, Y, Z, and he can't.
Yeah.
And not only that,
makes you nervous for the future, right? With that sort of commentary.
But what really gets me is that obviously, like, this result, if he had said, okay, sales in Africa, like everybody's asking and worried, what's happening in Sudan. I even wrote about that when my original coverage of Codan and the problems in Sudan. And like, this is a bit of out of control. Everyone's worried about that and asking them about that on the calls and stuff like that. And they're just saying, oh, no, it's sort of, we can activate new markets in Africa, blah, blah, blah. And so they've obviously spent a bunch of money on this that has just yielded nothing. So that's the problem I have with it, is that, like, that's the massive issue I have with it, and should have sold ages ago in hindsight. Like, probably already it's been in a downtrend since those results came out in August. You can see it went down heavily on results. Results were in line with guidance. There wasn't much sign in the results that things were going bad. The main problem was a big inventory build. Well, that inventory I thought was going to, go out the door. And I guess they thought that as well, but it wasn't. So they've misread the market there. So now they're saying they've got bad cash flow. They're saying that sales, they're losing money in Africa from the looks of things. So they're going to right size there. It just seems like they haven't called it well at all. And that's not good.
Again, 100% right. I think they just completely misread what's actually happening. They were obviously high-fiving themselves with things are going well, but they didn't foresee the issues that might arise post-COVID. And of course, there we go. Anyway, look, it's probably, we'll probably talk about it again in a little bit more further detail once you do some numbers and so on over the next couple of weeks. But yeah, it looks pretty dire at the moment. Let's move on to the last one, and that's FLN. And I know you want to have a quick comment on that. I want to have a quick comment myself, because I just find it fun. I mean, look, we spoke about it just before we went online again, that this one promised a lot right at the beginning when it first came out. As an interesting business, it never actually got anywhere. In fact, it's been actually very, very disappointing. Stagnant growth, really not much talk about, even they've got a couple of interesting businesses. But today's summary, I just want to quickly read it out, Claude, because it's, for me, I just find it funny. So they're blaming it all basically on a series of events caused the macroeconomic environment to sharply deteriorate from May. Initially, the crypto crash took with it a fair amount of millennial wealth, and this bled into a broader tech wreck. This, coupled with the highest inflation over 40 years and skyrocketing US dollar, crimping budgets as living standards deteriorate the most since 1950s. In addition to the war in Ukraine led into Northern Hemisphere. Okay, so I don't know about you, but going about the millennials losing the crypto wealth and so on. I mean, is that a big part of the business? Is that what they rely on? The millennials with cashed up millennials? I don't quite understand what this got to do with anything. But anyway, they've just been so disappointing. Have you got anything else to add to this?
Just that it's just a bit of a joke. Like, they have a bit of a 45-page quarterly report every time with like a million pictures of people, and like it's just so heavy on the random guff. And what they do is, like, they always claim, oh, we're the biggest freelancing network and stuff. There's like other similar companies that seem to me to be bigger or the same size anyway. So I'm not sure that they like are that there's no network effect going on here. Like, they're not the only place you can go if you want to hire someone to do this kind of work, and nor are they the only place to exist if you want to do this kind of freelancing work. So yeah, overall, don't find them impressive. I remember like 4 years ago them talking about like having sort of this business to business like idea that they were going to do that was going to make them money. They bought escrow.com, but then that sort of immediately performed a lot less, a lot not so well. And yeah, like the actual numbers there, if anything, they've been getting worse. I think over the long period, there was like a time when I thought that these guys were, on the verge of being profitable, and yeah, I don't think that that's really the case anymore necessarily. They sort of never seem to be able to break into that profit side of things. So yeah, just completely agree, and careful with those ones.
I've just put in a 10-year chart on this. It's been such a major disappointment for 10 years. And if you can't get it right in 10 years, move on.
Yeah, like I think there is some like validity to that. It's like they already had a fair bit of revenue when they listed.
Yeah.
And yeah, it should be profitable by now, basically, is what it comes down to.
Yeah, I think that the market should be really calling out, the underperformance, saying, come on, guys, if you can't get this right, either management move on or, do something else.
Revenue's super sluggish. So like in the last half year now, going back a little bit, revenue was up just 5.1%, but their loss went from 1.6 million to 3 million. So
And I remember, Claude, they used to reinvent themselves every couple of years, trying to obviously find new avenues to revenues and so on. Nothing's worked.
Nothing's worked.
All right. On that note, is there anything else you want to talk about that we've missed out on today? Because I think we've gone through a lot. We've had a pretty long sesh.
Yeah, that's pretty long.
It is. So, I mean, look, I'm glad because we're both fundamentalists. So that's why we normally talk about quite a lot about it. I haven't seen any good charts today at all.
Yeah, look, I've got to go and deal with this Codan disaster. This is a bad one. This is the worst one. That's like the worst news I've got for a while on the market.
Sorry about that.
I'm a bit upset about that one.
All right. So anyway, I'm sure you can mitigate the fallout and maybe come out with it okayish. I just called it wrong, obviously, and the market's just finally. But I
think the market's losing trust now. That's what you see in this minus 20% move like this on an AGM update. It's a trust problem now, and that's a whole new ball game. We're not just talking a little bit. We're not talking about a weak quarter. We're talking about a big disappointment now, and that's when it starts going to credibility. I'll hold the company through a weak quarter, but when it goes to credibility, it's harder to justify.
Fair enough. All right. Thank you so much, Claude, for joining me. Pretty much have a great day, everyone, and we'll see you again tomorrow. Cheers.
Cool. Thanks a lot. Bye.
Thank you.